Morning, everyone. This is Tommy Lackey with Relativity Capital Advisors and Power Investing website. This morning, what I want to do is I want to take you through a deep drill down into the energy sector. As I was looking over things this weekend, it seemed to be one that stood out and is now the high relative strength. So let's take a look through using the Power Investing website. The URL is up here in the upper left. I will tell you we're still working out a few kinks and cleaning up a few things, and we don't have much in the educational section yet. But I'm getting all that together, and we'll have that up soon. But I just wanted to show you kind of how we can use this to drill down into and figure out where we want to focus. Now, the Power Universe page is one of the main pages, and all of our pages are up here across the main menu. Power Universe page gives us the entire universe. And as we take a look at it, we can kind of start to see on the RSI chart that we're seeing some improvement, and we're seeing higher lows in both RSI and price, and we continue to kind of move well there. And then we move down here to the breadth, and we're also seeing that the breadth got to some pretty tough spots, an extreme on the breadth thrust, and a few of these others, and even the McClellan summation came down below zero before it kind of started curling back up here. But we're seeing some improvement across the board. Still have work to do, but it gives us a good start to kind of see and look where we're at. Now, when we move on down here, the reason we chose to focus on energy is one of our main relative strength rankings is the 11 equal weight sectors that we put together and we break down from our universe. And energy happens to be up here at the #1 spot. Now, it's been there for more than a week, but as you can see, just 1 month ago here on the 21-day, it was all the way down to 9. Now, this is a 3-month relative strength, so keep that in mind. It is a short term. It tries to catch turns a little better, so we probably aren't too late in this move based on using that calculation. Now, if I flip over to my 12-month relative strength, energy is also up at 100, which I'll show you a different way to see that here in just a minute. We also can go down here and see that in our subsectors is if we sort them by the sector, you can see right here where the 4 energy subsectors are. We've got 153, 100, 86, and 94 versus all the other subsectors. So holding pretty well there too. So now what we're going to do is we're going to flip over to the energy sector page itself. Okay, let's take a look here, and in the energy RSI chart has 2 things on it. Now, these tables on the right are going to be more organized. They're going to be based on how you see them on the chart on the left, but right now somehow they got a little bit jumbled up on me. So let's pay attention to the chart here on the left. The top window is the relative strength rankings versus the other sectors. And as you can see, the 3-month is blue, red is 6-month, black is 12-month relative strength calculations. And as you can see, it did dip down a good bit here, but we're now back up to a strong, and that 1 year never really lost the relative strength that during this pullback. Now, the other thing we want to see here is in this RSI chart, as we zoom out a little, we can see we have a nice divergence here coming off of these lows and in this bear range area. And then RSI made its way back above 60, shifting back to a bull range, pulled back to 50, and now is back above 60. So we're looking for this to continue, have a good chart pattern going. We held back here at some previous highs in kind of that zone area and didn't lose it. And now we're moving back above the MA bands. Now when we move down to our next chart, it's the energy breadth chart, which we have this on every sector, and it's nice to see just how it's performing just within that sector, not breadth as a whole. And as you can see here in this particular one, we're seeing our moving averages move up pretty quickly and improve. We got 80% or so above the 20-day moving average. We got 75% above the 50, and we got 75% above the 200-day moving average. Now our advanced decline line here in the second window from the top, it hasn't made new highs, but it does look like it's starting to improve, and if we can get over this area, we can start to go back towards challenging that. The number of 52-week new highs in the energy sector pretty much went non-existent there for a while during that pullback, but it's starting to perk back up for us as well. But probably my favorite here to look at is the breadth thrust and the McClellan summation. The McClellan summation has made a nice move off those lows, and on this last little dip, held pretty well with a little whipsaw versus a signal. And our breadth thrust, while making a divergence down here, previous, this extreme was a much higher low and just below that 40% when it bottomed out, giving us a nice sign of strength. Now moving down to our next section, we have the relative comparatives. Again, all these are just different relative strength measures that can kind of compare and confirm each other to make sure that we're focusing in the right areas. And as you can see right here, energy in the relative comparative versus our whole universe versus the SPY, the QQQ, and the IWM has been making good improvements since last fall. And then we took a nice dip here, but it rolled back up and started turning back late August and now continues to move higher. Now what's more important is when we zoom out a little more here, you can see that this is a larger turn after years and years of underperformance. We're starting to see some trend lines on these relative charts break here, and it's starting to move back up. And again, just showing that this might be a little more emerging strength than something that's just more heading towards the end. And then our final chart here is the percent making new highs and lows. You can see in this particular chart, again, similar. We had a nice divergence on the number of new 10-day lows and 21-day lows when we got down here this low. Now, it did make a higher number here, but with these other two non-confirming, then us seeing that strong move out of it, I think that gives us a good idea that there was some participation there that was kind of bent up, okay? Or pent up, excuse me. All right, so this gives us a good view and gives us an idea that we obviously have strength in the energy sector underneath the surface. So let's keep going and working our way down the page. When we look at the next table here, this is the relative strength rankings of each of the energy subsectors versus each other. So just rankings versus each other. And as you can see, exploration and production is leading, consumable fuels, storage and transportation, and equipment and services. So equipment and services really haven't been your leader, even though that's what a lot of people tend to focus on. Once we get on down into here, there is a ranking for the different ETFs. If that's kind of where you want to stop, just get you a good spread of the area. And we have some specific ones in here like frac and XOP for oil and exploration and production, if you just want to focus there. It also has all of the major diversified energy ETFs in there. Ranked against each other, again, same relative strength rankings, so we can get very used to using this same system. And then if you want to go on down to the energy stock level, but just stay within the energy as a whole, you come down to our bottom table, the final table on the page, and it basically will show you all of them ranked from 100 down to 0. Now again, you can either look at strength here, since this is more of an emerging trend, or you can look at the RS movers by sorting these columns and basically seeing the ones that have moved the most RS points over the last 5 trading days. And then the next column is 21 trading days if you're looking for a little longer gestation in that move. So again, we can see we have PBF, CPE, CVI, CVE, NBR, P10, PTEN, and some of the names we know that are on the movers list that might be worth paying attention to. Now in the site, you can click on that, and it's going to take you to a trading view chart. Now these charts are my particular built charts because I do have a subscription and I'm signed in. But even if you don't have a subscription, it will bring up a chart. You can take a look at it there on a basic level. So that's one great thing about being able to drill down and go straight to the charts you like. Again, here on a weekly basis, this one's just now coming down, holding 40 RSI bull range on this pullback and starting to move back higher. The daily went into a bear range, got stopped at 60, it's kind of coming down, and now it's moving on through. So PBF might be something worth a look if that's your thing. Over here on the right, you can see, though, this is a $1.4 billion company, so realize it's a smaller cap company. And I do have a lot of that kind of stuff in my universe, so we don't just focus on the big boys. Eventually, even though right now a lot of them are leading, eventually that will change. And especially in this sector, you can find a lot of good stuff in the very mid to smaller size companies. But back to the energy sector, so you can stop there, you can review through there. Or you can do what we like to do, is we like to just go sector by sector, or subsector by subsector, which is what I'm going to do now. we're going to quickly run down through each one of the subsectors in order of how they were listed. Now, the top subsector we have is our oil and gas exploration and production sector, or subsector, excuse me. As you can see, this right here has relative strength rankings versus all of the other subsectors of 100 in 3 months, 6 months, and 12 months. So that's versus all of them, and good. This table over here is set up right. It didn't get mixed up with the other ones. As you can see here, that's where these RS scores are over here. And then the sector 1 year pure, and the pure ones are just versus the other energy sectors, subsectors. So as you see here, this one's already up here on the equal weight index that we build out of each holding within that subsector. It's already breaking out, had a nice little cup, maybe a handle, maybe kind of small for a handle, but it did pull back a little bit, and it's now moving above those highs. RSI down here is well into a bull range, held high on this last pullback. CFG did the same. Going down to the breadth in this particular sector, we can see here we have even stronger amounts. We got 94% above the 20-day moving average, 92% above the 50-day, and 88% above the 200-day within the sector. Your advanced decline line is closer to new highs. You got 52-week new highs starting to perk up, and the moving average is turning up right here. And then we go down here, have a similar summation index, also have a similar situation where we diverge slightly on the last breadth thrust or two ago, and then this last one just barely got to that extreme level when we pulled back slightly. Now here, you kind of move on down, and we can go into, again, that same relative comparative charts. You can see these are making new highs, and here you'll see we've added versus the energy, equal weight energy index that we built. So now you can see it versus the whole universe, the energy index, the S&P 500, the NASDAQ 100, and small cap. So you can see how it's outperforming or underperforming. Lines going up, you're outperforming. Going down, you're underperforming. It's just that simple. But it's a great measure of relative strength. You can look for breakouts in areas like this. You see it broke out versus energy a while back. And it's just now starting to get up to where it could break out versus the SPY. So these are good things. In these charts, if you want to look at something closer too, you can also extend here just like you can with any trading view chart. Also on the making new highs, new lows, we had a nice divergence here on the two short terms. We had that spike on the long term. And also I mentioned on the last one, on that one did not diverge, but look how far down it got, and look at the previous times. The previous times it's got down here, we were near short-term lows at least. Doesn't get you out of the woods, but when you start getting up here in these clusters of new highs right after it, it certainly does give you a little bit of confidence that there's some participation there. Now, once we've gone through these, we can do the exact same thing down here with all the stocks in this area. We can look for the strongest, which have probably already moved pretty good at this point, or we can sort it by the RS movers, and we can sort it by any one of these columns, the close or the daily percentage, weekly, monthly, quarterly, any one of these relative strength time periods. The 13 WMA-RS is basically the price divided by the 13-week moving average. And so what that is in each one, it's for the 13 for the 3-month, it's the 26-week for the 6-month, and it's the 52-week for the 12-month, which basically gives you the corresponding ratio versus its moving average. So we have lots of ways to look at relative strength in here so we can make sure we find the things that are moving in the direction we want them to. If you want to short, just flip all this upside down. Now after we do this, we can look at, once we've gone through here, now we go to oil and gas consumables. And we look at the same thing. Now I know some people are thinking this is repetition, but with visual learning, one of the things you got to realize is that repetition allows your eyes to start picking up on patterns, on things that are going on, and eventually it helps us flow through the system much quicker once you've learned kind of how the system works and what you're looking for. Here, this is our second strongest sector. As you can see, 75's over here. But versus all the other subsectors, all 51 of them were in the 90s on all three categories. Again, a lot of strength, hasn't quite broken out yet here, but we have had our divergence on RSI. We have gone into a bull range and held at 50, and now trying to work our way higher. This is the equal weight index of all the securities in it. So again, it doesn't just look at the market caps, it looks at all of them together to see kind of is the participation adding up to enough for us to want to get involved. Brent chart's similar. Again, we look at a lot of the same things we've seen in the other ones, but this one only has 71% above the 200-day, 79% above the 50-day, and 71% above the 20-day. So, depending on how you look at it, either it has more room to move and more that can move up there versus the last one we looked at that's in the 90s, or maybe you'd rather go with the one that's in the 90s because there is so much strength there, and a lot of times strength begets strength. We know that about the market, so you don't want to ignore that until it starts showing that weakness. You can look down here in the relative comparative, and you can see that this one doesn't have near the strength as the last one. In fact, if we look at it versus the energy, it's actually rolled over a little bit. Not to say that's going to completely deter us, but that's a piece of information we can put in our weight of the evidence to see how hard we want to press the gas, or is this something we want to kind of avoid for now. Versus all the majors, it's still outperforming some, and versus the universe too. So you just might say, maybe this is not the area of energy I want to put so much focus in. We have the same percent making new highs and new lows over here, similar action, pretty hefty right here on the way down. So you want to have that in the back of your mind. And then we can go down here and see, okay, who've been our strongest? And then what are our movers? Next is oil and gas storage and transportation subsector. When we look at this one looks like one that has not emerged yet. It looks like a little inverse head and shoulders down here. It's right at that breakout point. It hasn't even moved into an RSI bull range down here, with something we certainly want to be focused on. That break into the bull range, we could get a nice acceleration or rejection here. Obviously, we want to wait a little longer and let it set itself up. We go down here to the breadth, same thing, only 84%, are over the 200-day moving average. So this is something for us to think about because of the longer day moving averages that's still above them. Only 65% above the 50, so it hasn't really gotten up there yet, but above the 20, we're up to 78% now. So again, this looks to me like it's an emerging subsector in the energy space and looks like it wants to improve. The summation index is getting pretty close to zero. Had a nice flat move on the sides, now starting to move up. We got a more deep extreme again, so the volatility here and the extreme here was deeper on the breadth thrust on this particular subsector. Okay, so the volatility is something we want to pay attention to. All those things kind of confirm that it has not performed as well so far. Same thing here versus the energy. You can see it's right here down the bottom. We'd want to see this start moving up before we start to put too much effort and energy into the area. Doesn't mean we can't take a position here and there. We just want to keep the leash a little tighter until that improves for us. Over here, we didn't have quite we had the divergence, but we also got another low here. Again, kind of showing how that inverse head and shoulders is formed out, and we're not getting a bunch of new highs in the subsector yet, so we want that to improve as well. Again, before we start putting too much attention there. However, it doesn't mean you still can't find good movers. Okay, these are the strong ones. If this is the weakest sector and these are the strongest ones, we might want to look at this one this way because it means that they're the ones that are really emerging first. Okay, and so like here, you see it's a very similar to that last one when we click over, or to the actual subsector equal weight. But you go through enough of these and you'll start finding some charts like this that are seeing some good energy or good volume already in a new daily bull range and might be worth a shot. Depends on your time frame, your trading style, all of these different things. Or, like we said, we can go back to these movers, say, okay, who's moving? I'm not sure if I worry as much about the absolute relative strength, but I want to know who's moving. And like here, this is a nice inverse head and shoulders here on the daily. We're getting an okay footprint. We'd kind of rather that be a little lower volume there, so something to pay attention to. But it has not broken into the daily RSI bull range, but the weekly here never came down and even touched 40. So again, showing some longer term strength, some decent volume candles here, footprint on the weekly. So it's something, again, if you're into that style, also realize you got a $2 billion company here, so look for the potential for that volatility. Or we can even go to something like LNG, a name we know, a larger cap, of course, and we can see that this one is already starting to move out. It's already had a breakout. However, really strong looking RSI here, a good looking weekly breakout. If you're a longer term person, you might be able to start a position or start tiptoeing here in a $24 billion name, bigger in the space. All right, and then finally, we go to our equipment and services subsector. This is the lowest relative strength subsector, and if we look at this equal weight chart, we can kind of see why. You can see this one's still kind of in a muck. So if this is something you really like, you want to wait and see this get a little stronger and move over, or you want to realize you're buying more stuff versus these lows, not because they've already broke out and are showing that strength. You are expecting them to follow. And that's okay, just make sure you know what you're doing with your trade setup and all of your risk management is designed accordingly. Here we only have less than 50% above the 50-day or the 200-day moving average, only 59% above the 50-day, and only 72% above the 20-day. So we are seeing it emerge on the lower time frames, but this really is a laggard here across the board if you look at it. So you just want to make sure that if this is where you decide to focus in energy, you know that you're not picking the guy running out ahead. You're picking the guy you're hoping to catch up. If you don't start seeing that soon, then you want to make sure that you take that into consideration. Here you can see versus energy just continues to move down. So we have no real reason to pay a lot of focus or to put a lot of entries in this area yet. Again, not a big subsector either. There's only a few stocks in this one really. So if you were thinking it was going to emerge, then you probably would want to focus on the strongest. Okay, and see, and obviously this is a nice looking daily setup on something that's already done a really strong. Okay, now for some reason my video cut off, so I'm going to splice this together. But here you're in a daily pullback and got to go RSI at 80. You want to be cautious that you're a little late stage, but it doesn't mean you can't make money depending on your time frame. It doesn't mean it can't move a good bit further. This is a $1.5 billion company. It's got some room to move if it wants to size-wise. Or here you might want to continue to stick with the movers. So this one went from 31 to 76, so it moved 45 points. NBR. I hit that chart earlier, or even say I'd rather go with one other than that guy. Let's look at here. And again, you're nowhere near the highs like the other one. You're down here at the lows, so you are assuming this is going to try to make back or play some catch up or even OII. Again, I know by tickers versus names 90% of the time. So again, you're not in a bull range, all of this, but you can check all this through the particular website or through the Power Investing website. The URL is power-investing.com, and then you can go over here. Now, one thing I will tell you is on some of the links inside that go to the other sectors and subsectors, they may, with the ands in them, the ampersand, those are giving us some trouble, so we're working on that, but you can always get through the top menu. You can go to any of the sector and subsector pages you want. Also realize this is a lot of data, so it takes the page just a second to load. However, I feel once you kind of run through and you start seeing the flow you can get through here, that's going to be a very minor inconvenience versus the time you can save as you drill down into these different sectors and subsectors. All right, I hope this helps. Hope it gives you an idea of where things are. You can feel free to jump on there yourself if you want to dig in and try to find the individual holdings that fit you best. Good luck out there, and hope everybody has a great week.